Hello, everyone, and welcome back to another episode of Wagmi TV. We come to you today on a pretty wild day in the markets. There's been a ton of currency volatility going around, and we're here to help you make sense of it. We have reason to believe that the probability of a sovereign debt crisis has increased tremendously, namely because the US dollar has been getting significantly stronger, particularly over the last 5 days to a week. So to break it all down, as always, I'm joined by the absolute homies, the NFT Lord himself, Alex Garcia, the All-American, Ev Smith, and the Doctor, Doc Mata. How we doing, boys? How we feeling about all this tumultuous volatility in the currency markets?
A little bit scared. Don't know where to be putting my money. That's for sure.
Yeah, it definitely is a little bit crazy what's going on here. I don't remember ever seeing this amount of kind of volatility in the currency markets. It's ridiculous because, fiat currencies shouldn't be more volatile than equities or crypto. And that's kind of the world that we live in right now. So we're here to break it down for you. We're going to explain what it is in terms of what is a sovereign debt crisis in the first place. How did we get here and what's causing it and what to expect kind of moving forward. So in terms of a little bit of definition to start out, what is a sovereign debt crisis in the first place? Basically, it's when a government can't fund themselves, right? So you basically have a situation where the essential goods and services needed for the citizens of a country can't be produced by that country's government. Well, you can basically consider it a full-on currency crisis where the country cannot buy what they need to buy, right? And so kind of how did we get here, right? Like that's kind of the main question. And I'm not saying that this is going to happen for sure, but as I mentioned before, the probability of this outcome has gone up materially. The main reason for that is because of the rapid strengthening of the dollar. And the reason for that is we've discussed it many, many times, is the increase in interest rates, but also the fact that the United States right now is seen as kind of like a haven, like kind of asset class or asset territory, right? So a lot of issues going on in foreign countries. There's concerns over global growth. And because the Fed is increasing rates, that makes US Treasuries more attractive. And so it's gaining a lot of financial traction and financial investment, right? Now, then the next kind of question, and this is what it really comes down to, is why is a strong dollar bad for a lot of foreign countries and a lot of foreign kind of entities? For me, it really comes down to two main factors. One is the amount of dollar-denominated debt countries have. We talk all the time on this show about how the level of, corporate and public debt has gone up tremendously since 2008, right? And the reality is not all of that debt is held, by the United States. It's held globally. And also all of that, or not all of that debt, but a lot of that debt is based in US dollars, but it's being held by another country. So what does that really mean? That means the interest payments on that are due in dollars. And so if you're a foreign country and the US dollar is increasing at a very rapid pace, that makes your interest payments much more difficult to pay, right? Because in your local currency, you have to pay more and more and more. In the case where, you can't even afford to make those payments, what ends up happening? You end up having to print more of your own currency. And so one thing I want to bring up here is something that outlines and shows the relative kind of where countries stack up in terms of the amount of dollar-denominated debt that they hold. So you can see this, and no surprise here, right? Two of the ones that really stick out are Argentina and Turkey. And then you ask yourself, okay, what are the two of the most inflationary countries there are in the whole world, right? And it ends up being Argentina and Turkey are on that list, right? And so the way that they're getting by in terms of paying off their dollar-denominated debt is they're just printing ridiculous amounts of their own currency, and that's what leads to terribly catastrophic things happening and 70-80% inflation rates there. What's interesting looking through this looking through this graph, there's a bunch of different countries, but those two definitely stood out to me. But all countries to kind of like pay attention to, right? Countries that have significant dollar denominated debt, and all of these countries are currently, basically inflating extremely hard right now compared to the US dollar. That making sense so far?
Sir.
Sounds like it.
Good.
The next thing I kind of wanted to talk about, in terms of the reason why U.S. dollar is the strengthening U.S. dollar is bad for foreign economies, is the imports versus exports. If you're an import centric country, right? Not all, but many goods and services around the world are transacted in US dollars. So it's almost the same issue, right? If you're importing a lot of goods, right, and the US dollar is increasing. So oil is a great example. If you're importing a ton of oil is priced in US dollars, meaning that if the dollar is going up, not only have oil prices increased globally, but in your local currency, they're going up like 2 times as hard, right? And so you end up getting this like really rough kind of compounding effect where, okay, now I'm out of US dollars and I need to pay for goods and services to bring into my country. What's the only way to do this? It's either to buy dollars, which increases the price of the dollar, or to print more of my own currency, which increases the inflation in my own country, right? So you can kind of see how this compounding effect takes hold. And it's kind of just a brutal cycle, perpetuous cycle that continues to take hold. And so what we're kind of seeing that unwind right now. As a refresher here, here's the US dollar index over the last 5 days, I believe. As you guys can see, we've gone from 110 to 114 in a period of like 5 days. On the same time, in the last month, the 10-year treasury has gone up almost 1%, maybe even more than 1%. So you're seeing, huge signs of rapid moves in kind of the fixed income market. And we always say that the fixed income market is, what to watch, right? That's where kind of the quote unquote smart money lies. And so I do want to highlight, this isn't for sure going to happen. It's not something that's set in stone, but it's something that we're definitely keeping an eye out for, and just kind of a rough go around this, right now. What do you guys think in terms of any initial thoughts on that? Like, how are you guys kind of thinking about all this that's going on?
I mean, I think it's a really interesting topic. And for our listeners, right, it obviously is going to apply back to things like Bitcoin, cryptocurrency, the equity market, right? It's all kind of tied in together. I think that was a really good overview of it, Soham. And again, like, it's something to keep an eye on. It's nothing that's guaranteed, but it isn't something that was necessarily on our radar 5-6 years ago. I think right before we had chatted about this or hopped on here, Garcia, didn't you mention something about how this is kind of a new process of taking debt out between different countries? Can you talk a little bit about that?
Yeah, so I was just kind of saying how like obviously over the course of like history and time of the world, obviously countries have always kind of borrowed things from each other, but at this large scale of borrowing and exchanging foreign assets with one another for each other's goods, like not just good to good trading, but actual like foreign exchanges. That's a relatively like new international monetary strategy for a lot of countries. Like I think like maybe 150 years, 120 years, where it's at this level where it's like an international ledger of like, you basically understand who owes what debt to someone else based on what time frame and what interest rate. And they're using that to actually keep their country going. Like that concept is relatively new. Like that's when, obviously the international markets kind of became intertwined, if you want to call it 150, 200 years ago. And then after that, obviously this stuff started to come into play. So it's in the history of time, it's relatively new, but it's been around for maybe 100, 200 years.
Yeah, and this is something that we came out of what the 40s and 50s in the gold back standard and moved into a debt back standard. It's nothing that
Exactly.
like is something new to the system. It's been running this way for 70, 80 years, but it was that question of what happens when these countries no longer can pay those interest payments. You know, it's almost like when somebody no longer can pay the interest on their house, it goes into foreclosure. Well, how does a company or a country foreclose? What does that mean for its citizens? What does that mean for the companies and the company's stocks? So yeah, it's a big question, and it's something I don't think we've seen before.
Yeah, it's tough because there's no bailout on that front like we saw a couple of years back with some of these companies, right? So it's a lot different when entire countries are moving through this. So I guess the real question here is, what does that mean for the markets? What does that mean for Bitcoin if something like this is to kind of come about? So, do you have any thoughts on that?
Yeah, I mean, in the short term, a stronger dollar usually means asset prices go down, right? We've talked about this a lot. We pay attention to the DXY a lot, and up until this point, it's been something that's more of a trend. Versus, I feel like in the last week, what really changed is not necessarily like what's happening, but the pace at what's happening, right? This is a really, really quick change, and we're seeing currencies priced relative to each other at levels that, I mean, definitely not in our lifetime, and maybe we'd have to go back to the 80s to even find something that's similar, right? And so the question is, how long can this keep going and nothing breaks? So I think in the short term, it's going to be net negative for asset prices, particularly like even growth stocks, Bitcoin, things like that. That being said, we're at this weird place where, I think most Bitcoin people, I was telling you guys this, but most Bitcoin people are kind of the view that the US dollar will eventually, fail in some way, shape, or form. I think most people like kind of skipped a step here where Bitcoin and crypto isn't necessarily ready to take the reins in the global currency, sphere. But at the same time, there's nowhere else to go but the US dollar. And what you're seeing is the US dollar just getting stronger and stronger and stronger. So I don't know. Hopefully at some point, Bitcoin or some cryptocurrency, takes the reins. But at this very moment, it doesn't look like that's going to happen.
Yeah, no, I mean, that's a fantastic point. I think we always talk about, okay, when is Bitcoin going to be that store of value? When are people going to start to rotate into that and it not be a risk on asset anymore? But at this time, it's still very much risk on. It's still speculation, right? And so I think you bring up a really interesting point with all of this kind of, in a way, collapsing on each other, right? It's all moving very, very fast. You saw the 10-year, like how quickly that shot up in comparison to 10, 15 years ago. It's never moved like it has. Same with the Dixie. It's just kind of moving like an equity at this time, which is not normal for any sort of fiat currencies, especially when they're denominated against each other. So I think it's an interesting point to think about, where we all want that to happen eventually, where Bitcoin can kind of be a little bit more stable, and it can feel a little bit more risk off. But is it really ready for that yet? And is this moving a little bit too fast before it's going to be ready for that? So it's kind of
Absolutely.
my 2 cents on that.
Yeah, absolutely. Completely agree. Well, for the listeners, if you guys have any thoughts, I know you guys are all watching the markets very closely. So if you guys have any thoughts, questions, comments, anything, leave them down below. Shoot us a like and subscribe, and we'll see you next time here on Wagmi TV.